All right. Good evening, guys. I hope you had a pleasant Monday. I would like to say compliments of the season to you all. I hope you enjoyed the holidays, and we're gonna have a wonderful discussion here. I'm just saying that there's a bit too much light on my side. Trying to see if I can get to a space where there's not too much light. It's distracting. All right. So my name is James from Varsity Unlimited Tutors. I believe most of you we have talked before. I believe most of you we have talked a little bit before in our first semester when we were doing the different modules that we did in our first semester. So what we want to do today is we want to have a little bit of a discussion for the modules in the second semester and how we can help you as Varsity Unlimited Tutors in terms of navigating your second semester. So within this class, we have got two types of students. I think we've got students that are doing honors and students that are doing a postgraduate diploma in business management. Maybe you can just help me so that I can just see the nature of the students that I have in the class. Are there any honor students in the class? BBA honor students in the class?
Yes, James.
Yes, there are.
Wonderful, wonderful. Then are there any from the postgraduate diploma in business management that we have?
Yes, I am.
Wonderful.
Yes, there are.
So the class is for both of the groups. I just wanted to make sure that you don't talk about business management when someone is not already in the class. But since we've got two groups of students, the information that I'm going to provide, some of it will relate to the honor students specifically, some of it will relate to the business management specifically, but all of you guys, you share some of the modules. And the most of the information that we're talking will be relevant to all of you, right? So this semester, just like your previous semester, for each module that you're going to do, you're going to have 2 assignments and an exam, right? So for the guys that are doing your business management, you're going to have 4 modules, and in each module, there are 2 assignments, which means you've got 8 assignments that you need to do, right? And 1 exam at the end of the semester. For the guys that are doing honors, you only have 2 modules. I believe it's accounting and operations that you have only 2 modules, but still you're going to have to do 2 assignments for each module and an exam at the end of the semester. But also for the guys that are doing honors, you are going to do research at the end of the at the end you have to submit your research report at the end of the semester. So that's in general the assessment that you have to do during the semester. But what is important is to also understand when are the assessments due. Because of course, if you don't know when they are due, you might end up missing the assessment. So I think the most important deadline that we all need to know and work with is the deadline for the first assignment, which is the 20th of February, if I'm not mistaken. If I am wrong, you can correct me. I believe it's the 20th of February, if I'm not mistaken, right? So by then, you should have at least done the first assignment, right? My encouragement usually is by then you have covered the project, the case studies, so that you're only left with the project. But at least by the 20th of February, you should have covered your first assignment, right? So in terms of how we can assist you as Varsity Unlimited Tutors, there are 2 packages that we usually offer in each and every semester. The first package is the one that we are going to discuss here extensively. And then the second package is for the ones that are not interested in the first package, but still need our assistance. So usually, just like we did last semester, we are going to be meeting at specific times, and then we are going to be guiding you through the assignments, highlighting to you what you need to do for you to get a pass mark from your assignment, right? And then the second package is for those that want one-on-one assistance. So if you want one-on-one assistance and you don't want the group assistance that we usually offer, you can give me a call and I can explain it to you on a one-on-one basis, because it will depend with how far you want the one-on-one assistance to go, right? But for the rest of the students that are going to be joining our group classes, right, the package that we have on offer is the same like last semester. It's 700 Rand for each module, which is 350 Rand for each assignment, right? So what you are essentially paying for if you are joining this package is you are going to get assistance with the assignments, which means that we are going to meet just like we've met today, and we're going to go through the assignment, break it down question by question, item by item, until we arrive at a final solution that you can then go and change and present to your lecturer. So that's number one. Then number two, where applicable, for example, let's say that after we've done the session, there are still some questions which you are still struggling with. We can also do extra question and answer sessions where the students can come in, ask the specific questions about the assignment, and then we can answer those questions for you. Then in addition to that, we are going to send you a sample of the solution. Right. So for example, if it's accounting and financial management, I'm going to send you a sample of the answer for financial and accounting management. You cannot submit my sample. Please take note of that. You cannot submit my sample, but however, you can use it as a guideline in the preparation of your final answer. It's just to give you a guideline so that you know that, okay, for this question, this was supposed to be the answer, and then you can prepare it your own way, because we would have gone through the question together within the class. So I'm sending you those documents that we went together with through the class, right? Then lastly, in addition to the assignments, we also will give you access. So we'll send you maybe 2 or 3 videos of previous assignments. So for example, the assignments that we done last semester for accounting and financial management, I will send you access to them. Or the past exam papers, memos that I have done already for financial accounting and financial management, I will also send them to you. This can therefore help you when you're now doing your revision. So you've studied a bit and you're now doing your revision and you want to know if you're doing your things correctly, then you can compare that against the memo that I would have given you or against the videos from the assignments that were done with other students in the previous semesters. So that could also be useful for you. And all of that is covered within the 700 per module or the 350 per assignment that you'll be paying for this general assistance, right? So that's for this specific package, right? Then in terms of when are we going to be meeting, right? So, okay, there it is. All right. So for accounting and financial management, we actually have the lecture this coming Sunday. So Sunday 21 at 5 o'clock, we are going to go through the assignment for accounting and financial management. So it will be about a 3-hour lecture from 5 up until 9 o'clock or until 8 o'clock. We should be done for the assignment. So once we've gone through the assignment, like I said, if at any point in time during the semester, let's say maybe on the 14th of February, all of you guys still feel like, James, we did go through the assignment with you, but there are some areas that we don't understand. You are free to highlight to me, and then we can meet again, and then I can explain those specific areas that you still feel were not adequately covered. But we would try to ensure that we cover the whole assignment on Sunday, 21 January. Right? Like I said, it's the video plus the sample, which means that even if you're a bit slow in terms of capturing what we're doing, you will still have access to the video. You will still have access to the sample assignment, which you can, even in your own spare time, you can do as an individual, right? Then there are certain areas. So for example, if you tell me that, James, I don't think I understand capital budgeting correctly. Can you help me on that? I already have videos where I've explained to students in depth about capital budgeting. I can also give you access to those videos so that you can have an in-depth understanding of specific topics. But it's just that I won't have live lectures explaining those things because I've already explained them a long time ago and they are on video, already captured on video. So I can give you access to some of those videos where I explain certain concepts in depth. If, for example, we've gone through the assignment on Sunday and you still have areas where you still need a much more in-depth explanation of this particular concept that we would have discussed, right? So that's accounting and financial management, right? Then for the guys that are doing honors, you guys do operations. So on the 24th of January, I'm going to send you guys the sample answer for operations. And then on the 30th of January, we then come together and discuss that sample answer, go through everything that is in the sample answer to explain to you what I was trying to do. So that is for the guys that are doing honors, right? For the guys that are doing postgraduate diploma in business management, next week on Tuesday and on Thursday, we are going to be doing HR development. And then the other Sunday, that is 20th January, we will do strategic management. That is Sunday and Monday, we work on strategic management, right? So please take note that the assistance that we offer, unfortunately, it does not cover the electives in terms of the assignment classes. It does not cover the electives. But if you still need help with the elective that you have chosen, you can also give me a call and I can see how we can help you out in terms of the electives. But the lessons themselves that we want to do, they don't cover the electives. They cover the three main modules, which is your accounting, which is your HRD, which is your strategic management, and for the guys that are doing honors, which is your operations. So that's basically what I'll be covering this semester. So for the rest of this time that we have together here, I want to just, for the guys that are new, I want to go through one of the questions on the assignment just to show you how we do it together. But before I go there, I want to open it up to everyone so that if there are any questions on what I've talked about that is not clear, you can ask those questions before I go a step further into what I want to talk about for the rest of the class today. Are there any questions from you?
Sorry, James. If I may ask, you have covered obviously for postgraduate diploma. I just want to know, when it comes to honors, like when it comes to proposal and research, are you still going to get to that?
For proposals and research owners, we do not have a class for that. Because what we have realized in the past, we sometimes did classes, but we realized that we start together with the students, but at the end of the day, they end up not attending the classes, because a proposal, the very nature of a proposal or research, it's individualized. Because remember, each of you is going to pick a different topic. So it's difficult for you to teach it in a class setup. Then again, each of you is going to be allocated a supervisor who is going to help you through the process of your research. So it's not really necessary to have a class for research. It's not going to add value. But however, on a one-on-one basis, if you need assistance with your research, if you need assistance with your proposal on a one-on-one basis, yes, I am available to assist. You can give me a call. We can discuss the nature of the assistance that I can provide to you. And then if you're agreeable with the prices that I charge, then we can go forward. So assistance is available, but on a one-on-one basis for research. I hope that's clear.
Makes sense. Thank you.
All right.
Hello, James.
Yes.
Yes, James, there's something that I don't understand. Maybe it's not clear on my side. That 700 Rand per module is covered a case study and a project, or is it for case study only?
Case study and the project. It's 700 per module. Case study. It gives you the case study. It gives you the project. It also gives you extra access to other materials that we have. For example, past exam answers, assignments done last semester. We can also give you access to the videos where we explain certain concepts with the other students that we have done. Because remember, each semester you receive different assignments. So we have like a database of assignments from 2020 where you can get access to those also and use them in your review. So all of that is included in the 700.
Okay, I understand.
Sure. Thanks. Any other question before I proceed? All right. If there are no other questions, then that's fine. I will proceed to accounting and financial management. So what I want to do here is I just want to give you a bit of a background. of what to look forward to in accounting and financial management. Then in addition to that, I'm going to take a small question from your assignment and we're going to do it in a class setup so that I just want you to have a feel of the value that you're going to get from the assignment, specifically looking at accounting and financial management, because I know it's one of the modules which proves to be a little bit difficult for the students. So accounting and financial management, there are quite a variety of topics. So for those of you that went from a business background, right, that went from year 1, year 2, and etc., you have already covered some of the concepts, because you're going to look at concepts such as the income statement, the cash flow statement, etc., which you covered in your year 1 under financial reporting and analysis, which you also covered in your year 2 under management accounting, which you also covered in your year 3 under financial planning and control, right? But you're just looking at it at a broader perspective, at a managerial level. That's how we are looking at these specific concepts. But if you have not done, like if this is your first time doing accounting, then yeah, it can be a little bit challenging if it's your first time doing accounting, because you then need to understand certain concepts that you have never learned about before, right? So the first or the key to understanding information about finance or financial information is understanding what we call the statements, the financial statements of an organization. Financial statements of an organization, basically it's how financial information is represented to the stakeholders of an organization. Right. So if a manager wants to show you the value of the organization, right, to say that this organization is worth maybe 100 million rand, they give you what is called a balance sheet. A balance sheet shows you the assets of the organization, whether they are fixed or they are current. It gives you the equity. How did we get these assets? Who are the shareholders of the organization, right? Does the organization, did it take any loans from the bankers that it has, and etc. So those are some of the concepts that you need to understand for you to have a deep understanding of what accounting and financial management is. But once you understand those core concepts, then you now go a step further and you start to assess, analyze this information so that you can make a decision within your company. So for example, you are taking the information and you're saying, should we as an organization increase our prices or should we decrease our prices? What level of sales should we as an organization attain in order for us to be profitable as an organization? So you're trying to make decisions based on the financial information provided for that specific organization. So that's what the rest of the units are going to be about. For example, unit 4, 5, 6, 7, 8, 9, it's all about decision making. But the first couple of units, from unit number 1 up to unit number 4, is just understanding what is finance, understanding what is accounting in the context of an organization. Right. So I do have videos for those of you that are doing accounting for the first time, accounting and financial management for the first time. I do have videos that go through the in-depth of what is a balance sheet, right? How is a balance sheet created? What is an income statement? And how is an income statement created? What is a statement of cash flows and how it is created, and etc. I do have in-depth videos on each and every one of these topics. You can reach out to me and I'll make them available to to you, right? If you are going to be joining my classes, that is if you're doing accounting and finance for the first time. But if you're not doing it for the first time, then you should be good to go. You just go through this specific study guide. It will cover you for what the lecturer wants you to know, right? So that's that, right? So you guys, you received 2 assignments. You received a case study assignment and you received a project assignment. So if you check your case study assignment under question number 3, you're going to see this question that we're looking at right now. So this question is under capital budgeting, right? It is under the topic of capital budgeting. Right? So what is capital budgeting? So when we are talking about the capital budgeting in the context of an organization, we are saying, how do we make decisions of where to invest our money? Think of it this way. Let's say you have got 1 million rand in your account as a business. right? You've got 1 million rand in your account as a business. Now, for you to make a profit as a business, you need to, is that a question? You need to invest. You need to invest that 1 million rand. So you can take that money and you can go and invest it maybe in delivery vehicles, and you can start doing Bolt or Uber or Mr. D, the type of services that they do, right? Or you can take the money, invest it in a factory, and start doing business like Coca-Cola, right? Or you can take that money, invest it on the stock exchange, and become maybe one of these giants that do investment and etc. So there are so many options that of what you can do as a business, right? So how do you evaluate the different options that you have as a business? That's what capital budgeting is about. How do you evaluate the different options that you have as a business? So option number one is you can say, if I invest 1 million into a business, how long does it take for me to get my money back? Right. So if I invest 1 million into a factory that produces cold drinks, does it take 2 years, 5 years, or 10 years for the factory to generate enough cash to give me my 1 million back? And that method is called the payback method, right? Of what? Of evaluating an investment. So that's one way of evaluating an investment. Another way is to calculate what is the percentage return on the initial investment that I've made in each and every year. So if I invest 1 million and I get 100,000 every year, 1 million, 100,000 divided by 1 million multiplied by 100 gives me 10%. This means that this investment gives me a 10% return in each and every year that I've invested my money. And that is called accounting rate of return. That's another way of evaluating your capital as an organization. Another way of evaluating your capital is called the net present value. Another way is called the internal rate of return. Another way is called the discounted payback period. So there are different ways of what? Of evaluating these things. Right? But like I said, if you now need an in-depth explanation for each way, how do I do payback? How do I do accounting rate of return? How do I do internal rate of return and whatnot? I have videos available that you can go through that can help you in some of those areas, right? In terms of the in-depth information. But for the purposes of our classes, we will mainly focus on the assignment, right? But if you need extra information, like I said, I will try to make sure that you get it for the what? For the purposes of learning and also for preparation of the exam at the what? At the end of the semester. Now, let's go back to the question. Are we still good for time? Yeah, I think we're still good. Right. So if you go through the question paper, case study, the case study question paper, it gives you a lot of information. Right. As part of the information, I've just extracted the information that is important for the question only. Right. So the question says here, refer to the proposed acquisition of a new machine for purchase and installation during the second quarter of 2024 and answer the following questions, right? And then we've got three, there are more than 3 questions, I just picked these 3, right? Question number 1 is asking you to have a look at the payback period. I've already told you what the payback period is. Question number 2 is saying calculate the accounting rate of return. I've told you what the accounting rate of return is. Question number 3 is asking you to look at the internal rate of return. I will explain what the internal rate of return is. But for you to be able to answer these questions, you need to go back to the case study, to the information provided, right? Okay, so just give me a second here. Right. So let's just do this. Sorry, just give me a second. I'm just trying to open my Word document so we can work from the Word document instead. All right. Trying to make this bigger, but it's refusing. All right, let me do it this way. Okay, accounting and financial management. Where is the question paper? All right, there it is. That's better. All right, so I'm just gonna close my video here. All right, I hope you guys can see. Can you see?
Yes, James.
Yes.
So, like I said, we are going through your question paper, the one for accounting and financial management. That's one that we are doing. Question number 3, that's where I want to start from, just as a starting point. And like I said, question number 3, it says, the first question says, using the information above, calculate the payback period. Right. So whenever you are doing capital budgeting, there is certain information that you're going to need while you're doing capital budgeting. You're going to need cash flows. You're going to need net profits. You're going to need depreciation, that type of information, right? So if you go into the in-depth of the other videos that I was talking about, it will tell you a lot of different things, right? But for payback period, we use what are called cash flows. For you to calculate the payback period, you need to know what is the annual cash flow. Now, each question that you're going to receive, there will be different types of cash flows that you receive. So each question can be unique. So what we are going to do right now might not apply to a different question. So that is why you need now to study further. That's why I was talking about those videos where you can now know, okay, if the question comes like this is what I need to do. If the question comes like this is what I need to do. But for this particular question, we are going to extract the cash flow information first for the payback, right? So if we go to the case study here, it tells us here that during the 2022, the management considered the acquisition of a new machine for purchase and installation in the second quarter with a desired rate of return of 15%. The machine will cost 6 million, excluding import duties, and have a useful life of 5 years. The machine is expected to increase cash flows by 2 million per year, cash inflows, but cash expenses increase by 300,000. So for you to be able to know what is the annual net cash flow, you're going to say, what is the inflow or what is the revenue? What is the inflow or what is the revenue? Right? So in this particular case, we are given it as 2 million. 1, 2, 3, 1, 2, 3. Right. And then what are the costs? And we're given that the costs are going to increase by 300,000 each and every year. So 300,000. So your annual cash flow is going to be equal to the revenue less the costs, which is going to give you 1.7, 1,700,000, 1,700,000. So that's the money that we are going to receive each and every year from year number 1 up to year number 5 when the project is running. So for those 5 years, we are going to be receiving 1,700,000 each and every year. That's the money that we are going to receive back, right? But the question then is, how much money did we invest within this particular project? So the money that we've invested within this particular project is going to be the 6 million, this year, which is the cost of the machine, plus the import duties. Because for us to get the machine into South Africa, we are going to have to pay import duties. So it's going to be 6,250,000. And for us to calculate the payback period, we are going to say 6,250,000, and we're going to divide that by the amount that we are going to get each and every year, which is the annual cash flow for each and every year. So using these two figures, I can therefore say 6250,123 divided by 1700,123, and then I get my answer of 3,68 years. Right. So that's the amount of time that it will take me to get my money back. But you can notice that the lecturer asked you that when you are presenting your answer, please present your answer in years, months, and days. Please present your answer in years, months, and what? And days. So for you to present your answer in years, months, and days, you need to go further than just saying 3,68 years. So this means that my final answer is going to be 3 years. How many months is it? So for me to calculate the months, I need to know it's what is 3,68. So it's 0,68, right? Multiply by how many months are in a year? We've got 12 months, right? So this will give me the number of months, right? So 0,68 multiplied by 12, and that gives me 8.16 months. So I'm going to come over here and say 3 years plus 8 months. How about the number of days? How do I get the number of days? So this says here it's 8.16 months. So it's 8 months plus 0,16, right? So I'm going to take that 0,16, 0,16, and then I multiply that by the number of days in a month, which is 30 days. So 0,16 multiplied by 30, that gives me 4.8 days. 4.8 days. So I'm going to say my final payback period is 3 years, 8 months, and 5 days. I'm going to round it up to 5 days. Right. So that's my payback period. So I'm actually done with question number 3.1, and I get my 3 marks there. Are there any questions on this one before I go to 3.2? No questions. That's good, right? So in terms of your presentation, the things that you have to be careful about is, like I said, your lecturer says present it in years, months, and days. So you have to make sure that you have presented it in the correct format of what he has asked you to what? To present your final solution as. Right? So let's go to question number 3.2. Right? So 3.2 says here, calculate the accounting rate of return on initial investment and express it to 2 decimal places. So if you check in your study guide, you are given the formula. So some of these formulas, I'm not creating them from my head. They are there in your study guide. If you go through your study guide, you are given the formula of how to calculate this thing. So it says there, it's the average annual profit divided by the initial investment. The only problem is you need to identify what the average annual profit is, and you also need to identify what the initial investment is. If you fail to identify these things, then your answer will become what? Incorrect, right? Then your answer will become incorrect. So let's go through. I want average annual profit. So if you go through the information that the lecturer is giving us, you will notice that he did not give you the average annual profit. It's something that you need to work out as a student. So for you to work this out, average annual profit, right, is going to be, all right, let me put an extra formula here. Average annual profit is going to be the annual net profit divided by the number of years. The total annual net profit, total annual net profit divided by the number. The reason why I've put this here is there are some questions that you're going to get that are going to be different from this one. So I don't want you to end up confusing yourself and putting the wrong answer. That's the reason why I've put this specific formula. But I might not use this formula for this question. I'm going to use a different one, right? So the first thing that we need to do is we need to what? To calculate the annual net profit. We need to know what is the annual net profit for each and every year. So annual net profit You are going to take the annual cash flow. Remember, we've already calculated the annual cash flow, and we are going to subtract depreciation. So annual cash flow minus depreciation gives us the annual net profit. So now, where do we get the depreciation? The formula for depreciation I've given it to you is the initial cost minus the salvage value over the useful life. What is the initial cost? We already said that the initial cost for this project is 6,250,000. Do not forget the import duties. Or if the installation fees, do not forget the installation fees, right? They are part of the initial costs, right? Minus the salvage value. Salvage value is disposal value. When the machine gets old, are we going to sell it? And how much are we going to get? In this particular question, there is no salvage value, so it's 0. Divided by the useful life, we are told here that the useful life is 5 years. So we divide everything by 5. Right? We put that in a calculator. 6,250,123 minus 0 divided by 5. That gives us a depreciation of 1,250,123 in a year. That's the depreciation. So we can come over here and say 1,250,123, right? So we then subtract our cash flow, 1.7 million, minus the depreciation, 1,250, and then we get 450,000. 450,000. So that's our net annual profit for each and every year. Right? So because this organization is receiving the same amount each and every year, I do not need to calculate an average. However, if for year number 1, I have 450, for year number 2, I've got 530, for year number 3, I've got 300 and whatever. If I have different amounts of net annual profit in each and every year, then I will apply this formula that is in red, which says total annual net profit divided by the number of years. It is only applicable if the company is receiving different amounts in each and every year. But I am not receiving different amounts each and every year. So I do not need to calculate an average because I'm receiving the same amount each and every year. Right? So now let's go back now. So we have our formula, right? So we can now say average annual profit is 450,000 divided by the initial investment, which is 6,250,000 multiplied by 100. And we can put that in a calculator. 450 divided by 6,250 multiplied by 100, and that gives us 7.2%. 7.2%. So that's our final answer. 7.2%, right? For this particular question, right? The tricky part about questions like these ones is, like I said, the information provided can be different. Other organizations, they will tell you in year number 1, we had a cash flow of 20,000. In year number 2, we had 40,000. In year number, so because there are now different cash flows that you are receiving each and every year, there are extra steps that you need to take. Some exam questions, they will actually tell you what the average annual profit is, which means you don't need to calculate it, right? Then there are some questions where your lecturer will give you a different question. You see, this one says here, calculate accounting rate of return on initial investment. Some questions can say calculate accounting rate of return on average investment instead of initial investment, which means you need to calculate the average investment first. So those are some of the things that you need to consider when answering a question such as this one. So this is question number 3.2. Are there any questions here before I move further? Question 3.3. Question 3.3 says here, calculate the internal rate of return expressed to 2 decimal places. Your answer must include 2 net present value calculations using consecutive percentages. All right. So this is internal rate of return. I'm not going to go too much into depth for this one because it's a very long topic, but the first thing that you need to know is when an organization invests money, that money loses value over time. The reason why money loses value, just think of it, bread, if you go back to 2008, you will find that bread was way cheaper, probably 6-7 rand. But if you come now, you want to buy bread, it's now more expensive. It's now 17 up to 22 rand. So it means that if you had 10 rand in 2008, it's no longer the same 10 rand today. It's worth less. So because it's worth less, in accounting, we apply a concept called discounting, right? So discounting means you want to find the present value of money that is going to be received in advance, right? So again, I've got videos that explain this concept in detail, but essentially, when you come to the internal rate of return, you are saying that after I have considered the discounted cash flows of a particular project, right? How, as an organization, can you please mute your mic? After I've considered the discounted cash flows of an organization, right? How can I make decisions as a manager in terms of whether to invest in a project or not to invest in a project? So you calculate what is called the internal rate of return for a particular project, which means it's the rate of return that is generated internally by that particular project. And you compare the internal rate of return of the project with the required rate of return of that particular project. So if you check in our company, where is it? This year, I hope you had seen this one. It says here that the desired rate of return for the project was 15%. Right? So that's the required rate. That's what you should aim for. So you take your internal rate of return and you compare it to this. If your internal rate of return is above 15%, invest in the project. If your internal rate of return is below 15%, do not invest in the project. That's basically why you need the internal rate of return. But how do you calculate the internal rate of return is what we want to do. So for you to calculate the internal rate of return, you're going to need the cash flows, the annual cash flows. So from year number 1 up to year number 5, our annual cash flow, remember we already calculated this and we said it was 1.7 million, right? So I'm going to indicate here 1.7 million. These templates that I'm showing you, they are from your study guide. The templates that I have here, they are from your study guide, so that at least you write it exactly the way the lecturer wants you to write it. Right? So once you have got your net cash flows, then you discount. When I say discount something, I'm saying find the present value. I'm saying remove inflation, remove interest rates, and find what is the true value of that money today if it's going to be received in the future. So the discount factor is something that you can get from your what? From your study guide. At the end of your study guide, there are some tables there that you can make use of. These tables here under appendices in your study guide, there is table number 1 and there's table number 2. The one that you're going to need for internal rate of return, we usually recommend you use table number 2 because usually you are doing cash flows that are the same each and every year, which means you're going to calculate an annuity. That's why you need table number 2, right? That's the one that we're going to use. So there is a little trick. There's a little trick that we can make use of to make our lives easy for us to find the discount factors that we're going to use. So we're going to use 2 consecutive discount factors to calculate this. So discount factor number 1 and discount factor number 2. Discount factor number 1 should give us a negative net present value, and then the other discount factor should give us a positive net present value. Then using the negative net present value and the positive net present value, then we calculate the internal rate of return using interpolation. Right. I have videos that go into detail in terms of why I'm doing some of these concepts, just that I am limited in terms of my time today for me to explain a lot of nuances. I'm just going to show you how I do it. And then if you need the videos, I can send them to you. They'll explain in depth in terms of why we do certain things when we are calculating internal rate of return. Right. So, like I said, there's a trick that we can use to do our discount factors, right? So we are going to say our investment, which is 6,250, right? We divide that by the annual cash flow, which is 1,700. If we do that, we get 3.6764, etc. Right? And then we are going to look into our year number 5, which is the final year, for the figure that I just highlighted here, 3.67. So 3.67, it's between 12 and 10%, between 12 and 11% here. So our first discount factor is going to be 11%. Our second discount factor is going to be 12%. I'll explain further even on Sunday when we meet, so that you just get a glimpse of what I was doing, right? Then we're going to take here 3.6959, and then from 12%, 3.6048, right? And then we're going to calculate the present value. So for you to calculate the present value, you're going to say the cash flow multiplied by the discount factor. So we're going to calculate the present value at 11%, and we're going to calculate the present value at 12%. So the present value at 11% is going to be 3.6959 multiplied by 1.7, which gives us here 6,283,030. And then at 12%, it's going to be 3.6048 multiplied by 1.7, which is going to give us here 6,128,160. So that's the present values. Then each investment that we make, we are going to spend 6,250,000, right? So how much money did we make? So if we invested at 11%, the money that we have made here is going to be 6,283,030 minus 6,250,123. We have made here 33,000. And then if we invest here at 12%, it means it's 6,128,160 minus 6,250,123. It means here it's 121,840, but this is negative. This is negative, right? Okay, just forgive me here. My narrations here are not correct. It's investment. Right. So that's the amount of money that we made from the project. Right. If at 11% we made 33,000, if at 12% we made a loss of 121,000. So now that we now know that if we use 11%, we make a profit. If we use 12%, we make a loss. Now we can calculate what is actually the actual rate of return for this particular project. So for you to be able to do that, you are going to use the lower percentage, which is 11%, right? Plus the average, which is 33,030 divided by 33,030 plus 121,840. And then you get your internal rate of return, right? So we put that in a calculator, 33,030 divided by 33,030 plus 121,840. And we close that here, which means it's going to be 11%, and 0.21. And then the final answer is 11.21%. So that's the final answer for the particular question that we were doing. So this question does not need you to interpret, if I'm not mistaken, just needs you to calculate. Just says calculate the internal rate of return, right? And nothing else. There's no interpretation that you need to do. So once you present your answer like this, you're done. That's the final answer that you're presenting. Right? So since we still have a little bit more time, I'll explain just a little bit more about internal rate of return so that gives you a little bit more context, right? So number one, when you're calculating internal rate of return, make sure you use the net annual cash flow. You do not use profits, you use cash flows. That's point number one. Point number two, for you to do internal rate of return, you need to calculate the present value that is positive and the present value that is negative. You need to calculate the present value that is positive and the present value that is negative. Once you have done that, then you can do what is called interpolation. So this here is interpolation. That's what it's called, interpolation, right? So you can do interpolation. Interpolation is like calculating the average. So you're saying that instead of 11 and instead of 12, I want what is the average. So it's 11% plus those figures. You calculate the average of those figures. 3.3 divided by 3.3 plus 1.1, and then you get 0.21. So it means that 11.21% is the internal rate of return. And if we were working in a company, I would then tell the manager of that company that, my guys, do not invest in this project. Why? Because the internal rate of return of 11% is less than the required rate of return or the desired rate of return of 15%, which means that we are making losses in this particular project. So that's question 3.3. So, like I said, ladies and gentlemen, on Sunday at 5 p.m., those of you that are interested, you can join us for the rest of the assignment. So we're going to be doing the assignment on Sunday from 5 up until around 8 o'clock. We're going to be doing the assignment for case study, accounting and financial management. If you want to join, like I said, the fee is 700 Rand for the whole module. That is both the case study and the project plus the extras that I talked about. Or alternatively, you can pay in installments. You can do 350 right now and then another 350 in February when we do the projects, right? Those of you that are interested, my number, I'm sure you have it. If you don't have my number, let me just write it down for you. I'll just put it in the chat box there so that if you don't have it, you can just text me and then we can see how we can help each other out, right? Then if you try to call me like right now after the class, you might not be able to get hold of me because I'm going to have another class for the MBA guys starting at 8 o'clock. So I might not be available if you want to talk with me like this evening. So maybe you can try to talk to me tomorrow in the morning or maybe after 9 once I'm done with the MBA students, because I'm meeting the MBA students also to just chat with them. Are there any questions for me before we dismiss each other? Are there any questions or everything was clear? Yes, I'm going to share the recording. I am definitely going to share the recording. All right. So if there are no questions, guys, I shall see you on Sunday, 21 February. Just take note of it in your diary. Sunday, 21 January, sorry. This is this coming Sunday. We will be proceeding with the assignment for accounting and financial management. Please have a wonderful evening. We shall see each other this weekend. Sharp.